Bitcoin was giving us the warning signs 3 weeks ago when we saw 3 red weeks down and also 3 red triangles. Those triangles are looking at lower highs and lower lows, basically telling us that the sellers were in control. Now, these things take time to play out, and like we've seen over the last 24 hours, there has been one of the largest liquidations in history, topping out over $1.8 billion of longs and shorts, mostly longs, but of course a few shorts there as well. So the question begs, what happens next? Is the cycle over? And are we going to see any new all-time high prices for Bitcoin, for altcoins? And I'm also going to cover the stock markets and that multi-year bull market going on, well, for the stock markets, but also more importantly for gold and for silver, as they've put in new all-time high prices and new 14-year high prices, hitting 44 bucks an ounce. So I've got a lot to get through with you guys in today's video. Make sure you hit the like button if you enjoy the content. Of course, you can always share it with a friend as well if you're finding value from it and positioning yourself for this real estate cycle. More on that in today's video. It's your home of macro cycle analysis. This is not just about altcoins. We're looking at Bitcoin, the stock markets, real estate cycle, precious metals, and of course throwing in the altcoins as well. I've got some big ones to get through as they've come back to some support levels. First thing is first, Bitcoin. Weekly chart, we're watching the 3 red weeks from the all-time high. If you prefer candles, you can see here from the top, all-time high price, 1, 2, 3. The long and short of it is essentially that this is a bearish sign. However, we were identifying that it may not be as severe as previous times that we've seen this signal. In particular, the 3 down weeks, the red triangles, right here, here, and here on your charts. Now, they're down weeks because they were lower highs, lower lows. Forget the color. I know people get a little bit hung up about it, but it reminds me about a quote that Naval has mentioned before. If you want to make the wrong decisions, ask everyone. I prefer to stick to my style of strategy, my style of analysis, which is essentially my thesis on the market. And everyone seems, well, other people that are new to the game, they try to look for all different reasons why something is happening. Now, if you're doing that, it's like trying to follow a diet and lose weight. You're following a diet and maybe it's got keto and it's also high carb and it's high protein. You're basically just taking everything in, getting super fat. There's no clarity to it whatsoever. So you can choose whatever analysis that you want to follow. But what I've found is choosing a particular type in my strategy is Gann analysis and cycle analysis. That allows me to have clarity on the market. So that's just my little bit of wisdom early on when it comes to picking the signals or indicators that you choose to use. Some want to go with RSIs, some want to go with MACD, some want to combine the two. I'm using Gann analysis here along with cycle analysis. Now, if you combine too many, you end up overweight, just too many things going on. So lower highs, lower lows, that's where I went with this rant on the 3 weeks down and also the 3 red weeks. These are signals that we have back tested at the Investor Accelerator to come up with signals for whether the trend is changing. In this case, we suggested that the trend was changing. We had a rally and now we're seeing this pullback. So where to from here in the longer term? Now that we've hit the $112,000 region, the closing price was between the 2 price targets that we were watching, or the 2 price areas. You can see the closing price was dead between the 2. The more important one that I'm watching is this right here, the 50% level from the rally. So this was from this low on the 1st of September to the current top on the 18th. And the closing price was just above that. We had some good volume coming in. And as I said, the liquidations were super high as well, which means that everyone that was trying to get in long has been wiped out at that point. We potentially start afresh. The sentiment is also resetting. We're still in this light bit of fear. It's not extreme fear. It's not even fear back down at the 20s or the 30s that we have seen in the past as well. Here is our fear and greed index on the trading view chart. You can see it's reading at 43, and in prior times, the fear has circled around 30 to 40. We're now currently at 43. So it could go a little further here, but if it did, there is still some good support levels to the downside. That being, as we looked at in yesterday's video, 107 to about 110. Those levels come in right here. That's the low so far. And that 110 area are these previous swing lows before the market started to move higher. So I'm just watching this zone here to see how the market reacts from this point. Yes, it is rallying lower as I'm filming this video. If we do get any sort of bounces from here, for the short term, Bitcoin needs to get above that price right there. You can see the low here, 114,396. Call it 114,400 for a round number. Today, here is some clarity on what needs to happen for the bulls. A move higher with a daily close in the next 24 hours, 22 hours to go. A close above 114,400 would get this thing back on the road after such a significant flush out of the longs. Of course, if it keeps going in the direction that it currently is right now, 112 is still in play there. That was the previous swing low here, and also the swing top, which was the May all-time high price before it just sold off a little there. So two very, very important levels for the market to hold. That's around that 112 at this point. Nice rally above over the coming days. In the next 24 hours would be ideal, above 114,400. But if it happens by the end of the week, absolutely okay as well. That would then turn this week, or it would still stay red if it closed above 114,400. But if it got above the opening price, which is at 115,300, then we'd have a green week there. But essentially, it's still just trading between those two levels. Even though the fear came out, even though we had the highest liquidations in history, like that's a huge liquidation day, which is a good thing for the market, especially as it's still in this trading range for this cycle. So they're the levels I'm watching short term. Now, longer term, if it keeps going and breaks down, a couple of key extensions that we're watching. Here is our weekly swing extension. This is again swing extension 109, basically right around that 110 that we were just talking about, and then the extension down to the 100%. So we're just watching this level. This is how you'd look to trade it. Looking around 101, of course, the 50% level there as well for the longer term move is sitting at $99,500. So right in the midst there, call it smack bang at $100,000, which is also a psychological level. What I'm saying here is the market could keep trending down with this longer term move. It's on a weekly chart. We're seeing two weekly bearish signals that we've talked about in advance, not at the time. The 3 red weeks and the 3 down bars, which suggests there is further downside, which suggests that the sellers are in control, which suggests that the bulls got a little bit too excited at that time. If they're to continue to play out, as we've been watching and they've done on previous occasions throughout this cycle, then even a move down to 100,000, between 98 and 101, of course, call it 100 for a round number, that is still keeping the structure of the bull market. From that point, we want to see it bounce back and get above that swing low right there. You can see the exact price, 107,270, so call it around 107,300 because it's going to differ between the exchanges that we're looking at. But essentially on this chart, 107,300. So yeah, the weeklies not looking too bad either. Okay, so that's on the Bitcoin price analysis. We've looked at the liquidations being the largest here in history, which is a good thing for the market sentiment to reset. And we're still seeing the sentiment sitting around 43. It wouldn't be out of the question for the sentiment to drop back into the extreme fear either, which is back down at around 25, 26 on the crypto fear and greed index. And from there, that's generally where we've seen some pretty significant lows come into the market. August 2024, big low. There was a higher low in September. Really, really fantastic buying opportunity when you see a higher low on extreme fear. And again, you had February, extreme low. You had April, extreme fear, I should say. They were both lows as well. And then the market started to rally from that point. Of course, we can go back through history and see many other occasions where there's been extreme fear and there have been good buying opportunities. So to me, is the move over yet? There are some signs to suggest that we're getting close, but we haven't seen the change in trend occur just yet. So we're watching now over this particular week. Obviously, the next 24 hours, I've told you the levels. And of course, this week as well, if we are to see some further downside, we want to see that bounce back relatively quickly. And how and why did this happen? Well, that was the interest rate announcement bar that I talked about many, many times in advance. August 2022, Powell said interest rates need to be cut. the market spiked and then continued to sell off. So essentially it was a buy the news within the minutes, and then it continued to sell off, so after the news as well. So it really did not have the staying power. We saw the market get to that price again when the interest rates were cut, and we're seeing Bitcoin sell off from that point once again. But I think there's still some good positives building in the traditional finance space to continue this move forward. We're also looking at the cycle analysis that we've pointed to several times before here on the channel that is pulling back. But just before we get to that, we've got the forward returns and a mention of the free crypto and economic report. This week, we're looking heavily into Bitcoin, the real estate cycle, and a few pieces here on the economy. So if you want that, the link is in the top of the video description. Click that, email, name, and you'll get that pretty damn soon. In terms of the cycle analysis that we've been following, this is our 5 and our 10-year pattern. Remember, we talked about this little pullback happening in September. So we'll zoom in on that now. And from that point, we saw more consolidation. That's for the first part of October, maybe the first week or two. And then Q4, October, November, December, continues to rally a lot higher here. So keep your wits about you. We haven't broken any significant lows. The structure is still in play. Our cycle analysis continues to play on. This is part of the TIA indicator suite that you can get access to, predictive cycles, and also the forward returns, which help quite a lot when it comes to giving yourself a roadmap for what we're looking out for next in the markets. Now, speaking of which, Bitcoin and the S&P 500. I alluded to the S&P 500 hitting new all-time high prices today. The thing I want to come back to is end of cycles. And this also overlaps with the global liquidity index. So we're seeing a lot of that money printing, whether it's the US, whether it's China, whether it's Japan, whether it's everywhere in the world, lots of money printing going on. And if it's not just pure money printing, the government is creating credit, the banks are creating credit. How do they do that? Well, the government gives handouts. That's putting more liquidity into the markets. That could be handouts from the form of tax cuts. It can be handouts in the form of removing any sort of fees or costs that they throw on. In Australia, I can give you an example. When they start to reduce stamp duties, it's the same thing. A stamp duty is a tax. A council fee, a county fee, whatever it is where you are, is a freaking tax. So there's all these taxes trying to take more money back. If they remove those, then that provides liquidity to the markets or to people, and they go and use that money elsewhere. Okay, so the markets are made up of people, obviously. Banks, of course, create credit. That's essentially their business model. Create credit, charge interest for that, made up money. Okay, so leading into the end of the cycle, looking at these global liquidity indexes, the S&P 500 typically tops after Bitcoin. So that's the main point that I'm, I guess, driving home here. The green line is the S&P 500. Bitcoin is the orange line. And just got a brief note here. Bitcoin tops first. 2021, Bitcoin, November, S&P 500. The price top was January 2nd, 2022. But doesn't matter. Weekly closing price here was December. Cycle before that, Bitcoin topped in December 2017. The S&P 500 topped in January 2018, so a month later. And 2013, Bitcoin topped. That was November 2013, and then the S&P 500 kept grinding higher through 2014, through Bitcoin's bear market, through 2015, which was also Bitcoin's consolidation, and then Bitcoin started to rise. The S&P 500 corrected, and then everything started to rise again together into that 2017 top. So essentially, throughout these peaks, Bitcoin has topped first, and then the S&P 500. I don't think the S&P is close to its final top for this cycle, based on a few reasons that we've looked at prior, especially the 18-year cycle. As we begin to see the real estate cycle top, the S&P 500 typically goes a little further. So although the S&P is going higher, Bitcoin has already topped. I think we may still have another leg to the upside, especially when we look at the timing of the cycle and where this liquidity is coming from. So keep that in mind. We are getting close, but it doesn't look like we're there yet. We haven't seen any of the structural breakdowns for Bitcoin either. So the S&P 500 has been doing very, very well. The metals market also doing very, very well. New all-time high prices, all-time high daily closes. The silver price is at a 14.3 year high. So we're beginning to see a rotation into metals. Well, we've been seeing it for the last several months, of course, coming back from this breakout around 35, which is where things started to get quite exciting. I think we may still see this. This is possibly still part of the overall bull market where everything is going up, but eventually the metals, like we saw in the last cycle of the last 18-year cycle, I should say, we saw a peak, S&P 500 corrected, stock markets corrected, and the metals kept going up through that period. We may be coming to that point. Now, there's going to be pretty severe volatile moves through that entire cycle into the final peak. Silver had dropped 61%, while the S&P 500 dropped around 30 or 40% through that period of 2008. Then silver kept going, pretty big move there from a few bucks, $9 up to $50. And it also had a couple of 30+% corrections throughout its bull market into that 2008 top. So the S&P 500 was still going up. It topped around here. And then, of course, the S&P fell into March 2009. And then everything started to go up from that point as well. So this is part of our rotating asset strategy at the Investor Accelerator. You guys, I've mentioned it before, and you've also asked me to talk about it. So it's going to depend on your particular portfolios. Of course, TIA Premium is there to help support you in putting those portfolios together and how you rotate your capital from one asset to the other, whether it's crypto, real estate, stock markets, metals. That's a place that I would suggest having a look at. In the meantime, we'll continue to follow up with the silver price and, of course, the gold price as well, as we're about long-term portfolios here. So understanding what we can do with our capital through each of these parts of the 18-year real estate cycle. Speaking of which, gold is at $3,790. It's a few bucks off $3,800 after breaking out of $3,500 a few weeks ago. So still charging on to new fresh prices. And I don't think this is going to stop anytime soon in terms of like major corrections. But of course, like we saw with silver, there were also significant corrections through the cycle, but it doesn't mean that the cycle was over. You can see here was around 35% for gold. That was in 2008. So that same period that silver did 61%, and then gold kept going higher as well. So it still looks like there's more in there. The trend is still up. The movement's still up there. Copper and so on, platinum, palladium are all still doing relatively well. However, copper is one of the weaker ones here, which generally makes up, is used as an economic indicator. So it has started to pull back, which is why we've been looking at rotating out of particular assets into something that's a little bit more, say, risk off per se. S&P 500 doing very well, new all-time high prices following our chart pattern here of the last 5 years. There may be a bit of a turning point coming up, as we've pointed out with the cycle pattern. The NASDAQ hitting new all-time high prices as well. Yep, new all-time high. And it hit 25,000 points, which was part of my forecast back in January of this year. So I had a few forecasts here. NASDAQ hit 25,000 in 2025, and the Dow Jones to go to 47,000. Now just a few hundred points off that right now. Yep, about 500 points, so barely anything there. Looks like it'll get to those targets by, before year end for sure. And look at the yields and the bonds, of course. They've also started to rise again. So we saw a low form around those interest rate announcements, and now the yields have begun to rise, which is not a great thing for the US, especially with their bonds and where they currently sit economically and where these interest rates are at. You're seeing these yields rise because the bonds are continuing to fall here as well, longer term, of course. They want to get money into their markets to help support what's going on with their economy and so on, yet their interest rates are also rising. Now, short term for the bonds, it does look like it wants to go up, which is hopefully going to hold things stable here for a period of time leading into the peak of the cycle. And I have talked about before, watching the bonds run to at least these peaks here around 122, potentially up to the 50% level around 126. So if we're watching this begin to run and it starts to fail at a couple of these levels towards the peak of this cycle sometime, I think, late this year or early next year for the real estate and economic cycle, and we see a rejection, I think that could be another warning sign that things aren't going as well as what the government or Wall Street want us to believe, even though the stock markets will potentially keep going up longer term through that cycle. So they might keep running until late 26, maybe 2027. We'll have to wait and see. But there are a few things now that aren't looking as good. So to crypto, the USDT dominance, the piece of the puzzle that we're watching for the continuation of the bull market is a breakdown of 4.1, around that 4%, 4.1, and more importantly, the 3.7%, which has basically held the market up this entire cycle. We saw a breakdown into 3.7 back in December 2024, then held there for January 2025, and then it bounced off that. So all the money that was, money that was in Bitcoin, cryptos, was taking profits and going back into USDT. So we saw that huge spike there into the low of April, and then that money's flowed back out of USDT into the markets. At the moment, we're seeing higher lows and potentially higher highs. So we're really much on the lookout here for any sort of short-term breaks of 4.6 and then up to our resistance levels at about 4.8 to 5%. For this cycle, I don't want to see any closing prices, consolidation on weekly charts above 5%. I think that is really going to put some dampeners on anything to do with the bull market. If it were to run to these levels and then come back down, I think there's much less chance of us breaking that 3.7, right? And that would be where you want to see lots of money flowing out. ETH's going to go nuts, and Sol and Bitcoin and all sorts. So again, for clarity, we run up to these levels and overbalance in time and price of that move. We could be on the lookout for a higher low forming for the USDT dominance, which could call the end of the cycle. This is for Bitcoin and cryptocurrencies. So I'm on the watch out for that. Should we get this move higher and then any sort of trickle downs, people will get excited again. Yes, money's coming into Bitcoin and cryptos, but I think that will be a pretty big telling sign. And I think a very similar pattern will begin to show with the combined stablecoin dominance here. So USDT and USDC, you're already seeing high highs, high lows on the short term. It's holding up above its 7-year resistance or 7-year support line, sorry. You can see through to 2019, similar sort of thing on USDT, but a longer time frame there. This to me, should we break a little further up here, probably around that 7.5, that's going to start to look even weaker. And of course, that's the big boy there. Goes above 9%. I think this cycle is in a fair bit of trouble, but we're not there yet. Something to watch. We haven't got there. Even if it were to do that and then start to reject, even this could be good for Bitcoin and some of the major alts, because a lot of that money would go back into, say, Ethereum. It'll get another pump, and Bitcoin should get another pump, and you'll start to see that money flow back out as well. Now, there's a few more things to look at with the altcoin markets before we cover some of the alts. And they are the others chart, which has corrected. So down is bad for altcoins outside of the top 10, but basically the other 20 million coins out there, it goes up, then good for altcoins. At the moment, got rejected yet again at that level of around 8.2 to 8.4, markets down. Okay, so until it sees any sort of breakout, as we've been talking about for months here on the channel, we need any sort of break above 9%, because that's basically where all of the resistance has happened. There was support, broke down, support becomes resistance. Therefore, probably not going to see any sort of big moves across the entire altcoin space. It's just been happening over and over again. If you want the hopium, I'm sure there's plenty of people out there that'll give it to you. If you want to make money, then try to follow one style of analysis, whatever that one is that you choose, and just know that sometimes things don't work out the way that we're promised by the hopium. So watching up here, watching between 9.5 to 10.5 for the big hopium. Unless that happens, any sort of moves probably going to be met with resistance again. Still not out of it. Still hasn't broken down these lows of 6.8. There's still some hope there. Bitcoin dominance, I've been looking at a rise on the dominance up to around 60%. so far, that is what is happening, and probably happening because of, well, everything else has come crashing down and a flight back to some sort of safety into Bitcoin. Even though Bitcoin's gone down, the stablecoin dominance has gone up, profit taking, protecting capital, and then Bitcoin as well. You know, some of the movement back into BTC. So I'm still watching for a rally here somewhere to around 60, which has been support and resistance in the past. And the total market caps have also found some resistance, pulled back. Total market cap overall is looking okay. Total 2, which includes Ethereum but excludes Bitcoin, still looking okay. It's still above 1.5 trillion. And total 3, which is everything excluding Bitcoin and ETH, pulling back off this double top, pretty significant double top, but still has not broken down from 950 billion. So everything's still looking pretty much on par there. Ethereum pulled back as anticipated. We're watching for that 20 to 30% correction, and the positioning here from the COT data that Jason Shapiro does at Crowd and Market Report has suggested that Ethereum would be pulling back because the commercials, as you can see in the red, are heavily short, whereas the large speculators, that's everyone else that's not part of the commercials, any of these sort of hedge funds you hear about on X, or any of these sort of investment portfolios that are buying Ethereum and whatnot, part of the large speculators. They're buying up towards the top in heavy numbers, and these other guys are going short. And that's essentially what we've seen happen with Ethereum. That was the top. It took some time. It's been over a month now since we had that bar running to 4,600, and then we had the new all-time high price a couple of times there in late August, and then of course we've corrected. So although it's corrected, it still hasn't broken the low here at 4,000. It hasn't broken the 50%. It just seems like a balanced correction, at least in my opinion, going from the high to the low. It's been a 17.6%. The 20% that I'm watching is somewhere around 3,900, and the 30% still sits at around 3,400. So it's all still above the 50% level. That's the halfway point through the rally. Some people still get a little bit mixed up with that. These halfway points are like magnets for the market. The markets love to watch the 50%, whether they do it consciously or subconsciously. It is like a natural number. It is a God-given number for whatever reason. Halfway points, people just are attracted to them. So, market so far, 41.85, still holding up relatively well. Any pullbacks look relatively balanced. ETH BTC also pulling back here, still quite stable. This has been the view that I've been sharing with you guys on the channel. It's rallied up a little bit harder than I thought, but now it's back to where it was, and I think we've still got a little bit further to go here, at least to sort of 3.3, 3.4. We'll keep watching it to see if we see any sort of bounce and break above the 10-year resistance level. Was support, now became resistance. That's this yellow line that stems back to 2015. So it's still pretty much on track here, just having a bit of a breather. And for XRP, also pulled back $2.70, hasn't broken the 50% yet, but it has been putting in lower highs and marginally lower lows. Pretty much a flat base here, so just lower highs have been forming. A little bit weaker than things like we saw with Ethereum. Solana, on the other hand, has been putting in higher highs, but still below the all-time high, whereas XRP put in that new all-time high. If you've been following, obviously hit the subscribe button. If you're not, we are watching that time frame with XRP, that big time frame on the monthly chart. For some strange reason, XRP does 12 to 14 months time and time and time again in these long moves. So far, it's done 12 months to this top, and it's into its 14 month, but it hasn't broken that top yet. So it's at 12 months so far. As I said, it's crazy. We've been watching that now for months. It keeps doing the same thing. As with Solana, 5 months to the upside so far, significant pullback. 195 is a level to watch. Does it continue to consolidate above 195? That's going to be good for the bulls, and then another move higher. Watch that on the shorter term timeframes. Something like this, still, I'm not overly concerned. It hit those tops. It bounced. You can see the close is above those tops. So even on the short term, it's done relatively well. Consolidation above 210 is going to be the strongest part here for Sol, to then, when things recover, hopefully see another move higher. And in terms of the long-term timeframes, long term, it's going to take weeks to understand, to play out. It can run up to about 7 months in a row before you see a significant correction of 2 or more months. So it did 7 months from the low to the top, 6 months from the low to the top, 5 months from the low to the top, another 5 months from the low to the top, last cycle, 6, 5, 4. It does this over and over again, and I think it would be negligent to not be watching those time frames. We're into the 5th month. 6 is October, 7 is November. Somewhere around this Q4 could be relatively good if these markets, altcoins, can escape this current correction relatively unscathed. And unscathed means if they consolidate above their 50% levels. Like and subscribe. The reports are coming out starting today. So that is a link in the top of the video description. Plus check out the channel sponsors, Bybit. You've got SwiftX in there for the Aussies. And we've got the Australian Crypto Convention coming up in November. We have a few free tickets left there thanks to SwiftX. So all of that can be found in our Discord. Link to that. Just subscribe to the free report. You get all of those details there. I know I talk about it a lot, but there's a lot of great value there. People are finding some fantastic results. And I'll see you guys back here at the next video. Thanks again, guys. Peace out.